Hey there, I'm Miles. There are many current news going on in finance. I believe it's important for all of you to know what is going on in finance community. Our life depends on finance the most, and we can't really move forward with our life without finance. We deserve to know what is happening in finance community out there. I always love to give away great information, and you want to use my amazing information that will value your financial journey. Okay, before you watch this whole video, click to subscribe my channel. It is free and easy to subscribe. You just have to go below right this video and click the subscribe button. That's all you have to do. It takes only 5 seconds or less. What are the news? The stock market is eventually in a bubble. The bubble had been growing in the market. The bubble happened when the stock market went up and up, growing value ahead. It becomes overvalued. Investing too much to help a company could be a good thing, but it could be bad because it led panic selling and overvalued. And doesn't meet a company's true value, overvalued. A company's earnings is terribly lower than the stock price. The bubble also causes rising of inflation. Nearly all stocks go down so suddenly. Don't feel stressed out. You're not the only one going through that, we all go through the same. I own stocks, business, and other assets like all of you. Nasdaq, an index stock exchange that manages and operates companies, was down by 2% on January 21st. It's their first time declining since 2020. Remember, 2020 was when the COVID-19 pandemic happened. At that moment, it was when the economy screwed. Nearly all stocks crashed. Declining 2% was a lot because there are many companies under Nasdaq. Many stocks started declining. The bubble has bursted, but it's only the beginning. We don't see the real crash yet. Netflix just announced their quarterly earnings. You know every public company is required to report their earnings quarterly. There are 4 quarterly in a year. Netflix recently announced their first quarterly of 2022 earnings, noticing that their earnings declined. Their earnings report affect the stock price, dumping very bad. It lost $200 a share. Originally, it had $600. After announcing the report, the stock dumped to $400 a share. Netflix announced it was going to increase the cost of subscription to watch on their website. It increased because of inflation and extended demands as more and more people signed up on Netflix. Many people lost their job during the pandemic and stayed home. It made people leave Netflix, and more people are returning to their job as the pandemic becomes normal. Netflix declining earnings dumped the stock price. That's why I tell you inflation can be a bad thing because as the price goes up it can go down unexpectedly and difficult to predict. I want to explain you about the dot-com bubble. It's possibly similar to today's bubble. How did the dot-com bubble start? At that time, in 1990 or 1995, it was when the internet sectors were growing and booming. Like Amazon, eBay, PayPal, Google. Not just them, there were more internet companies during that time. Those companies went through initial public offering known as IPO, and they eventually became public and appeared on stock exchange. Many investors thought those companies were very opportunistic, and they invested into them. The internet was a golden opportunity in those days. Nowadays, investors still do the same. During the pandemic, most people stayed home and invested to give a hope for some big money. Since then, the stimulus checks were being paid to people, and more people invested in the market. Investing in the market can be a good thing, but too much leading to the overvalued market. Eventually, it affects the bubble. The same concept with the dot-com bubble when people would invest too much and became the bubble. It was very ugly and messy, even some investors lost millions worth of assets in one day. Many technology companies were expecting successful, unfortunately, ending up bankrupt. Upon the bubble, several companies survived and did well today. Like the companies I mentioned, Amazon, PayPal, Google, eBay. Those companies went through the bubble and panicked that they might be bankrupt. But they made it through the horrible moment. Wow, they went through the horrible time and made it through. You could see Jeff Bezos panicking in the interview during the time of bubble. But he stayed positive and stick with good business model. He ended up doing good and enjoys his life as a billionaire and one of the richest people. In case you are worrying or stressing with your investment or assets portfolio crashing, don't worry too much. I cannot emphasize big time enough that you do not want ever to sell your assets. Do not ever sell, do you understand? But again, I know I am not a financial advisor. But still, I do not recommend that you sell your assets. That's what I do, not selling my assets. If I choose to sell my assets, I will be obligated to pay taxes. And obviously, we don't want that. Not just paying taxes, I lose my ownership and control over my assets. That means my net worth is going down and down. And again, obviously, we don't want that. We want to go up. Exactly right. The best way to beat the market is we use Warren Buffett's famous strategy. His strategy is to buy, hold, and repeat. His strategy has been very effective so far as he has been investing in the stock market since almost 50 years. And his portfolio hasn't experienced any really bad crash. Although he did experience a market crash, but he would bounce it up. He had been in the market crash of 1987, dot-com bubble of 2001, financial crisis of 2008, and COVID-19 pandemic in 2020. He went through many times. His investment portfolio and strategy are very successful, always. So therefore his strategy works, that means us should be either. So I suggest you to buy and hold. I always do that, I almost never sell my stocks. I would be patient. You buy stock when the price itself dips or goes down, you want to take that sale opportunity. Buy and hold is the first choice, but there is a second choice. The second choice is to buy put option. Put option is available to experienced and advanced investors, but for those who are new to stocks I recommend you not to buy put option. Put option is very speculative and risky, making sure you understand when and what to do. It can be a disaster. If you are not sure, I will explain more about it in another time. Remember, if you want to learn about put option and other stuff, subscribe my channel. Then it will send you notification when I publish a video for the next time. When you want to buy put option, it's easy to remember. Put means down. So when you buy a put option, you would predict that a stock price, for example $100 a share today, and you predict it will strike $90 tomorrow, and then tomorrow it strikes $90. If you end up making a right prediction, and you will collect premium or money from the option. I like put option because it's like a stock insurance to hedge the risk of loss. For some of you who are new to stocks, don't worry about put option. Just do your part, buy and hold. Worry about put option later. Whenever you see the stock, housing, or other market change, you don't change your plan. Don't follow a market. Don't sell when a price falls. Don't be foolish. You follow your knowledge and plan, and a goal you have and stick to it. That's what I do always, sticking with my goal. I do not let the market change my goal or plan. If the market changes, you do not want to follow it. Follow your plan. Be consistent. Consistency is the important part to your successful investment portfolio. There are many factors that cause the bubble. Here are the big reasons of the cause. The biggest reason is people being dumb and speculative, treating the market like a casino. It's like when you go to casino and hoping for money, you end up continually putting money, and yet you keep losing. The same with what people did to the market. Do not treat your stocks like gambling. Do not put all in. Take good care of your portfolio. To be honest with you, since the pandemic hit, many people stayed home. That means more people understood how the market worked, but some people would speculate on hype stocks like GameStop or AMC. These stocks have no intrinsic value. People would just throw their money into them randomly like a casino. Their portfolio got really screwed up. Hype stocks, don't invest into them. Importantly, you want to invest into companies that will do well in the next 10 to 20 years. They are good, and do investing into them. Good stocks sustain your long-term wealth. Do not focus on short-term, think of long-term. Right now, we have the all-time low interest rate record. Low interest rate, it means and affects rising of inflation and price. Of course, low interest rate means more purchasing power. It makes credit or loan affordable for people. Remember, when more people can afford to borrow, that means more people can afford to buy goods. More people buy goods, supply decreasing, demands increasing. In the result, there aren't enough of supplies and commodities. Thereby companies have to increase cost of goods to cover the cost of goods. Think of demands and supply and how they work as they are part of our economy. Low interest rate, plus inflation and supply chain, they do affect the stock market. It's cyclical. Oh, and I want to add one more thing. Remember, low interest rate means more people can afford to borrow from banks. Borrowing creates the capable to leverage against stocks. And people who invested were able to take the advantage and made profits from low interest rate. Borrowing money goes into their investment portfolio. Also, the price of investment increases. Leverage can be amazing because of the low interest rate advantage. But importantly, when you want to leverage, be sure to invest into assets. Allocate the leverage into good assets that will do well in the next 10 to 20 years. Do not borrow money and put it into hyped market or stock like GameStop that has no intrinsic value. Think and be patient. Buy and hold. Consistency is important. Do those, and you will be very alright. When the price dips, you want to borrow against assets. That's what I told you recently. Borrow money from your brokerage or bank, whatever you name it. Take the all-time low interest rate opportunity. Federal Reserve announced that they might consider to hike the interest rate soon. That's why it affected the stock market to drop. Because high interest rate means less profits as more people can't afford to borrow due to high interest rate. So now you get how the economy really works. I know it's really shocking and interesting. Remember, you have my channel, and I love to give you amazing information that will value your financial journey. Go ahead clicking subscribe to my channel. I will be always with all of you. Keep an eye for my next post. I hope my information can be much helpful with your financial plan. Subscribe and smash the like button to get YouTube algorithm recognized on my channel, as there are many likes on my channel. That means YouTube algorithm knowing my channel's contents are very good and willing to share my channel to other people. You help other people with their financial journey by making them to check my channel out. Again, be sure to smash the like button, subscribe, and share this video. Thank you all for watching this video. See you soon and keep an eye on next video.